Look, I need you to pay very close attention to what I'm about to show you, because what's happening in the silver market right now is something most people won't see coming until it's too late. And I'm not talking about some vague prediction or hopeful thinking. I'm talking about concrete evidence that's been building for months. Evidence that suggests we're approaching a critical inflection point that could reshape the entire precious metals landscape. Let me start with something that happened just 3 weeks ago that barely made headlines. The Shanghai Futures Exchange reported a single-day withdrawal of physical silver that represented nearly 8% of their entire registered inventory. Gone. In one day. Now, you might think that's just normal market activity, but here's what makes it extraordinary. This happened during a period when silver prices were relatively stable. No panic. No headlines screaming about shortages. Just quiet, methodical accumulation by entities that clearly know something the average investor doesn't. And that's just the beginning of this story. You see, silver has always been the misunderstood sibling in the precious metals family. Gold gets all the attention, all the respect, all the central bank love. But silver? Silver has been quietly positioning itself as perhaps the most critical strategic metal of our generation, and most people are completely blind to it. They see it as just poor man's gold, or maybe a speculative play. They have no idea that silver sits at the intersection of 3 massive global trends that are all accelerating simultaneously. Let me walk you through what's really happening, because once you see the full picture, you'll understand why some of the smartest money in the world is moving into physical silver with an urgency I haven't seen in over a decade. First, let's talk about something that's been completely overlooked in the mainstream financial media: the industrial demand crisis that's brewing. Everyone knows silver is used in solar panels and electronics, right? That's the standard line. But what they're not telling you is the scale of what's coming. The solar industry alone is projected to consume over 200 million ounces of silver annually by 2027. That's not a typo. 200 million ounces, every single year. And that's just solar. Now add in the electric vehicle revolution. Each EV uses approximately 25 to 50 grams of silver, depending on the model. Doesn't sound like much, right? But when you're talking about projections of 30 million EVs being produced annually by 2030, suddenly you're looking at another massive chunk of silver demand that simply didn't exist a decade ago. And here's the kicker. Unlike gold, which can be melted down and reused relatively easily, most industrial silver is consumed. It's gone. Used up in tiny amounts across millions of products, economically impossible to recover. But the real story isn't just about demand. It's about what's happening on the supply side. And this is where things get genuinely concerning if you're not positioned correctly. Global silver mine production peaked in 2016 at about 900 million ounces. Since then, it's been essentially flat to declining. We're not finding major new silver deposits. The easy silver has been mined. And here's something most people don't realize. Roughly 70% of silver production comes as a byproduct of mining other metals, primarily copper, lead, and zinc. So, silver miners can't just produce more silver when prices rise. They're constrained by the economics of the primary metals they're actually mining for. Let me give you a specific example that illustrates this perfectly. There's a major mining operation in Peru that's been producing silver as a byproduct for decades. Last year, they announced they're shifting focus to copper because the economics make more sense. The result? Their silver output is projected to drop by 40% over the next 3 years. And they're not alone. This is happening at operations around the world. The silver is still in the ground, but it's not economically viable to extract it at current prices. Now, you might be thinking, okay, so supply is tight and demand is growing. That should push prices up, and then more supply will come online, right? And normally you'd be correct. That's how commodity markets are supposed to work. But silver isn't behaving like a normal commodity right now, and that's because of what's happening in the paper markets. The COMEX silver market trades roughly 150 times more silver in paper contracts than actually exists in physical form in their vaults. Let that sink in for a moment. For every ounce of real, physical silver that could actually be delivered, there are 150 paper claims on that same ounce. This works fine as long as everyone's content to trade paper and nobody actually wants physical delivery. But what happens when that changes? We got a preview of this back in early 2021 during the Reddit silver squeeze attempt. Remember that? Retail investors tried to force physical delivery, and within days, premiums on physical silver coins and bars exploded to 40%, 50%, even 60% over spot price. The paper price barely moved, but try actually buying physical silver during that period. It was either unavailable or priced at levels that made no sense relative to the official spot price. The market broke, temporarily, and it revealed something crucial. There's a massive disconnect between paper silver and physical silver. And here's what's different now compared to 2021. It's not just retail investors paying attention anymore. Institutional money is moving in, and they're doing it quietly. I've been tracking the flows into silver ETFs, and the pattern is fascinating. We're not seeing the dramatic, headline-grabbing inflows that characterized the 2021 squeeze. Instead, we're seeing steady, consistent accumulation week after week, month after month. This is the signature of institutional money, not retail speculation. They're not trying to make a quick buck on a squeeze. They're positioning for something bigger. And then there's what's happening in India and China, which most Western investors are completely ignoring. India imported over 7,000 tons of silver in 2024. That's roughly 225 million ounces in 1 year, from one country. And it's not slowing down. Chinese demand has been equally voracious, driven partly by industrial needs but also by a growing recognition among Chinese investors that silver represents a store of value outside the traditional banking system. Think about what this means. You've got industrial demand accelerating, mine supply stagnant or declining, and now you're adding massive physical demand from the world's two most populous countries. And all of this is happening while the paper markets continue to trade as if there's infinite supply. Something has to give. Now let me show you something that really crystallizes where we are in this cycle. If you look at the gold to silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, we're currently sitting around 88 to 1. Historically, that ratio has averaged closer to 60 to 1, and during periods of silver strength, it's dropped as low as 30 to 1. What this tells us is that silver is dramatically undervalued relative to gold, even accounting for their different industrial uses and market dynamics. But here's what's really interesting. Every time this ratio has gotten this stretched in the past, the snapback has been violent. In 2020, the ratio hit 125 to 1 in March, and by August, it had collapsed to 70 to 1. Silver didn't just catch up to gold, it massively outperformed. The same pattern played out in 2008, in 2003, and in 1991. When silver moves, it doesn't move gradually, it explodes. And I think we're setting up for exactly that kind of move right now. Let me tell you about a conversation I had recently with someone who manages a family office with about $800 million in assets. Smart guy, been in the markets for 30 years, seen everything. He told me they've been quietly accumulating physical silver for the past 18 months, and they're now sitting on a position that represents about 5% of their total portfolio. When I asked him why, his answer was simple. Because the math doesn't work anymore. The paper market is a fiction, and when that fiction breaks, I want to own the real thing. That's the mentality of smart money right now. They're not trying to time the exact bottom or catch the perfect entry point. They're recognizing that we're in a structural shift, and they want to be positioned before the crowd figures it out. Now, speaking of positioning, if you're sitting on retirement accounts worth $100,000 or more, you might want to check out the free guide I put together on how gold and silver IRAs actually work. It's in the description below. Covers the mechanics of getting physical precious metals into your retirement account without triggering tax penalties, which a lot of people don't realize is even possible. Worth a look if that's relevant to your situation. Anyway, back to where this price is headed next, because there's another dimension to this story that we need to talk about. The monetary aspect. Silver has always existed in this weird limbo between industrial commodity and monetary metal. It's not quite gold, which is almost purely monetary, and it's not quite copper, which is almost purely industrial. It's both, and that dual nature is about to become incredibly important. Here's why. As central banks around the world continue to grapple with inflation, currency debasement, and loss of confidence in fiat money, there's been a quiet but unmistakable shift back toward hard assets. Gold has been the primary beneficiary of this trend, with central banks buying at record levels. But silver? Silver has been largely ignored by official institutions, which means it's still priced primarily as an industrial commodity. But what happens when that changes? What happens when investors start recognizing that silver isn't just an industrial metal, but also a monetary metal that's been artificially suppressed by decades of paper market manipulation. I'll tell you what happens. You get a repricing event that makes previous silver rallies look tame by comparison. Let me give you some historical context. In 1979, silver was trading around $6 an ounce. By January 1980, it had hit $50. That's more than an 8x move in less than a year. Now, I'm not predicting we're going to see that kind of parabolic move tomorrow, but I am saying that silver has a history of explosive moves when the conditions align. And the conditions right now are more aligned than they've been in decades. Think about what's different now compared to any previous silver bull market. We've never had this level of industrial demand. We've never had this degree of supply constraint. We've never had this much paper market leverage. And we've never had this much global monetary uncertainty all at the same time. It's like watching a pressure cooker with the heat turned up and the release valve stuck. You know something's going to happen. You just don't know exactly when. And here's the thing that keeps me up at night. When this move happens, most people won't be able to participate. Not because they don't want to, but because there won't be physical silver available at anywhere near the paper price. We saw a preview of this in 2021, and that was just a retail-driven squeeze that lasted a few weeks. Imagine what happens when institutional money, sovereign wealth funds, and central banks decide they need physical silver. The premiums won't be 40% or 50%. They'll be 100%, 200%, maybe more. The paper price will become completely irrelevant because you won't be able to actually buy physical metal at that price. This is why the smart money is accumulating now, while premiums are relatively reasonable and physical metal is still available. They're not waiting for confirmation. They're not waiting for the mainstream media to tell them it's time to buy. They're recognizing the setup and positioning accordingly. Let me share another data point that I find absolutely fascinating. If you look at the total value of all the silver ever mined that still exists in investable form, it's roughly $40 billion. That's it. For context, that's less than the market cap of many individual tech companies. It's a rounding error in the global financial system. Now compare that to the total value of all investable gold, which is around $12 trillion. The silver market is tiny. Microscopic, really, in the context of global capital flows. What this means is that it wouldn't take much money flowing into silver to move the price dramatically. If even a small percentage of the capital currently sitting in bonds, or stocks, or real estate decided to rotate into physical silver, the impact would be enormous. The market simply isn't big enough to absorb significant institutional flows without major price appreciation. And I think that's exactly what we're starting to see. The flows are still relatively small, still under the radar, but they're accelerating. Every week, I'm seeing more evidence of large buyers entering the physical market. Not speculators buying paper contracts, real buyers taking delivery of real metal. There's a dealer I know who's been in the business for 25 years. He told me that in the past 6 months, he's seen more large orders of 5,000 ounces or more, than he saw in the previous 5 years combined. And these aren't retail investors. These are family offices, small institutions, high net worth individuals who are making strategic allocations to physical silver. That's the kind of demand that doesn't show up in the official statistics. It's not captured in ETF flows or COMEX data. It's happening in the physical market, quietly, persistently, and it's tightening supply in ways that aren't immediately visible but are absolutely real. Now, let's talk about timing, because I know that's what everyone wants to know. When is this going to happen? When should you be positioned? The honest answer is that nobody knows exactly when. Markets don't move on our schedule. They move when the conditions are right, when the last seller has sold and the marginal buyer shows up. But what I can tell you is that the setup is in place. All the ingredients are there. We're just waiting for the catalyst. And catalysts can come from anywhere. It could be a major industrial buyer announcing they're securing long-term physical supply. It could be a sovereign wealth fund disclosing a significant silver position. It could be a default or delivery failure in the paper markets. It could be a geopolitical event that drives safe haven demand. Or it could simply be a gradual recognition among investors that silver is dramatically undervalued, leading to a steady accumulation that eventually overwhelms available supply. The point is, you don't want to wait for the catalyst to position yourself. By the time the catalyst is obvious, the easy money has already been made. The smart money positions before the catalyst, not after. Let me give you an example from a different market that illustrates this perfectly. In 2007, very few people saw the housing crisis coming. But there were a handful of investors who recognized the structural problems in the mortgage market and positioned themselves accordingly. They didn't know exactly when the crisis would hit or what would trigger it. They just knew the math didn't work and something had to break. And when it did break, they made fortunes while everyone else was caught off guard. I think we're in a similar situation with silver right now. The math doesn't work. The paper market is over-leveraged, physical supply is tight and getting tighter. Industrial demand is accelerating, and yet the price is still trading as if none of this matters. That disconnect can't persist indefinitely. Here's another angle that I think is underappreciated: the role of silver in the green energy transition. Governments around the world have committed trillions of dollars to decarbonization and renewable energy. Solar is a cornerstone of those plans, and solar panels require silver. Not a little bit of silver, a lot of silver. And there's no substitute that works as well or as cost-effectively. What happens when governments realize that their green energy goals are constrained by silver availability? What happens when they start competing with industrial users and investors for limited physical supply? The price has to rise. There's no other way to balance the market. And this isn't some distant future scenario, this is happening now. Solar installations are accelerating, EV production is ramping up, 5G infrastructure is being built out globally. All of these technologies require silver, and the demand is only going in one direction: up. Meanwhile, mine supply is essentially flat. Recycling can't keep up, and above-ground inventories are being drawn down. At some point, probably sooner than most people think, the market is going to wake up to this reality. And when it does, the repricing is going to be swift and dramatic. I want to be clear about something. I'm not suggesting you should put your entire portfolio into silver. That would be reckless. What I am suggesting is that if you don't have any exposure to physical silver right now, you're missing what could be one of the most compelling risk-reward opportunities in the entire commodity complex. Think about it this way. What's your downside? Silver is trading well below its all-time highs. It has genuine industrial demand that's growing. It has monetary properties that become more valuable in times of currency instability. And it's in a structural supply deficit that's only getting worse. Even if I'm wrong about the timing, even if this takes longer to play out than I expect, you're buying a real asset with real utility at what appears to be a historically reasonable price. Now compare that to the upside. If even half of what I've laid out here comes to pass, if we see even a modest repricing of silver to reflect its true supply-demand dynamics, you're looking at potential returns that are multiples of your initial investment. And if we get a real monetary crisis, if confidence in fiat currencies continues to erode, if the paper markets break, the upside could be exponentially higher. That's an asymmetric bet. Limited downside, substantial upside. Those are the kinds of opportunities that smart investors look for. Let me leave you with one final thought. In every major market cycle, there's a moment when the narrative shifts. When what seemed obvious in hindsight was completely obscure in real time. When the crowd is looking one direction and the smart money is quietly positioning in the other direction. I believe we're in one of those moments right now with silver. The mainstream narrative is that silver is just an industrial commodity, subject to economic cycles and nothing more. But the reality is far more complex and far more compelling. Silver is a strategic metal sitting at the intersection of industrial demand, monetary uncertainty, and structural supply constraints. And the paper markets that have suppressed its price for decades are showing cracks that are getting harder to ignore. The question isn't whether silver is going to reprice higher. The question is whether you're going to be positioned when it happens. Because once this move starts, once the physical market breaks away from the paper market, once the premiums explode and availability disappears, it'll be too late to get in at reasonable prices. The smart money is accumulating now. The question is, are you going to join them? Or are you going to wait for confirmation and miss the move? The choice is yours, but the clock is ticking.